Happy Monday, everyone. So as you can tell by the daily chart and the rocket up here, we took off today and we're very bullish. So I was kind of surprised with how far higher we traded today. I didn't really expect to have this big range day. I could kind of see it be a possibility throughout the day, and that's why I decided to just not trade and not do anything. During the cycle I usually trade, which is 9 a.m. to 10:30, the 90-minute cycle I usually trade, and I'll talk about why exactly. But we drew back up to this fair value gap in the breaker, which I mentioned last Friday, I believe, or sometime last week, was potential, and how if we wanted to go higher, I didn't want to see price spend this much time inside there's a weekly fair value gap here, but it closed deep into it, so I was kind of like unsure about lower prices, and I wanted to, I was ready to see either it retrace up here or accumulate Monday and then continue delivering lower to these lows. Those are like the two scenarios, but now I'm thinking that okay, it could actually, based off how Monday traded, it could continue making around to that high. So again, I have to keep taking it cycle by cycle. I can't just tell what's gonna happen exactly by the just the daily chart here. I'll come back to the daily chart because I want to show something on the smaller time frame before bringing it back to the daily chart, and that's one good reason I wanted to make a video here because I'll show you how price and time is fractal, how to use the smaller time frames and apply them to the higher time frame, and see that it really just does the same thing. So keep all this in mind. Um, Last Friday, I was looking for the buy side liquidity that I noted right here. So last Friday, I said how I showed my trade because I was asked to show higher time frame to execution, and that there was a really nice trade in the afternoon that I was using the higher time frame. Well, you can go watch the video, but I did say how my bias was up here buy side liquidity. And what do we see when we come into Monday? We see accumulation during Asia. We see London move lower, especially at 3 a.m., which is a distribution cycle. Actually, it's a manipulation cycle. No, it's a distribution cycle of the the overnight session from midnight to 6 a.m. And then we turn higher at the morning session, a.m. session, 6 a.m. to 12 o'clock. So this is that distribution after the manipulation beneath. So if I'm positioning myself at 9 a.m. and I'm looking at this time frame, the hourly chart, and I see that okay, we trade underneath PM session low into the daily breakaway gap, which is this one highlighted in blue, and then we rejected higher, like wicked higher. We failed to go lower. The body stayed above this low, by the way, and I'm I'm giving myself right the first cycle of the first 90-minute cycle in red, and I see this big candle here. I think it's safe to say that this was accumulation, manipulation, and distribution. And we're going to distribute above these relative equal highs. Okay, so that's what 930 does. 930 opens up. See it's dotted there. And then just goes straight delivers to those relative equal highs. We don't see a Judah swing. We don't go lower at all. And I was expecting not to go lower at all. At around like towards the end of the morning, I did not think this was a Judah swing, and I'll show you more examples where it looked like it was a Judah swing, but I was in one execution where I was not thinking it was going to be a Judah swing, but it resembled one, and that's because I'm using the higher time frame, and I'm looking at 9 a.m. cycle, and I'm saying, okay, this is should be a distribution. Now I didn't expect it to distribute that high, but I still am looking as this being a distribution cycle. So I'm not really interested in shorts. So um, before that, I'll go with London. And London had really nice price action on the smaller time frame. Now this is the 90-minute cycles with a closer look. So you see clear accumulation in the first red cycle here, and then the green cycle runs higher, creates a high, and then rejects. Nice order block there, runs lower, and then some consolidation before delivering lower about midway through the cycle, all the way down to the daily breakaway gap, or the fair value gap. Now this leaves a dealing range. So this is important, and I'll talk about this too because there's another model I can build off of this. One of my own models, I call it breakpoint, and I'll talk about breakpoint. But when you see a dealing range from high to the lowest low of like the day or whatever, right? Like there's no previous low. It's a very complex model, and there's a lot of things you need to qualify. But basically, all you're looking for is a high to low where we leave a breaker. So that means that that high to low, that low needs to have traded to a level of sell side liquidity or discount array, right? Whatever. And then you have the market shift, and basically, you're not looking at this being a buy side liquidity. You're looking at this to be like a speed boost. You know, like in Mario Kart when you got the little speed boost and you start to go faster. You know, or me when I'm driving on the highway at night and I just start going faster. Like this is now nighttime. There's no cops, no one around, and I'm driving faster at speeds that you couldn't even imagine. That's basically what happens here. Price just starts to accelerate higher. And I built a model off this my early days, where I just look for the first fair value gap inside this dealing range once it crosses above that dealing range, and then deviate the dealing range by one projection. But right now I'm just talking about the London session. I'm getting ahead of myself. So this is the 1 minute chart of the whole London session. One thing I didn't really like is it took until the third quarter to run, but it didn't really manipulate. It just this was actually accumulation and a redistribution in the third quarter. So one thing someone could note is that this low to high from Q1 all the way to Q3 in the green cycle, 90-minute cycle, this could have been a dealing range, and then you could say, oh, this is my model, my breakpoint model, but inverse, right, for bearish, which is actually called landslide. So this could be landslide. Why doesn't it respect this fair value gap? Why does it go higher into the range? It doesn't accelerate lower. Well, that's because this isn't landslide, and you need to understand how to qualify my model before you actually use it. So over here, this is currently the lowest low of the day. Okay, so once we get underneath here, there's a lot of sell side liquidity here. Unlike right here at this high, this is sell side liquidity. If I go show you this chart here, we still have Asia highs here. This creates a lowest low of the day, while this one doesn't create a highest high of the day. So if let's say over here with this run, we created the highest high of the day, and then we broke lower underneath that low. I'd look for acceleration down to this low, and so forth. So this is why like this looks like my landslide model, which I have a picture right here. So it looks like my landslide or breakpoint or landslide model, whichever bearish or bullish version, whichever you want. But it's not actually that model. That's why what I mean with this model is very complex. But it's my model. I built it all myself in 2023, and it's a bit outdated because I'm still using macro times when I built this model. But yeah, so basically though, that's I just wanted to add that in, just a little gem or bijou, as my French teacher said in high school. So now the AM session. Um, Basically, I talked about how I waited for the first cycle to play out. The first cycle ran higher, and then it came back into this fair value gap, which is breakpoint. So breakpoint, this one, first fair value gap, institutional and order flow entry drill inside the dealing range that drew on a discount array. Okay, at a specific time. And basically I'm looking for a real quick run outside of the dealing range, not really wanting to go back into the dealing range. And that's exactly what happened here. And I'm waiting until the end of the first cycle before looking for trades. Now that I don't trade my breakpoint model, I tried to trade it, and I'm not. I just my characteristic is that I'm a scalper. I find it much easier for me to scalp until Q2. Uh, it could have just, like, I don't like to, even though I know that I could get in down here and it would go higher, it could continue accumulating above the dealing range. Okay, so I'm not going to be buying with usually I'd have a wider stop loss too if I'm trading my breakpoint model. Instead, I waited until we had an expansion outside of the accumulation. Seeing that expansion outside of the accumulation, so that you can look at that 5-minute fair value gap that was created, I am not looking for this gap to fill. Okay, because why? This whole price range is balanced. Price has no need coming back down into it. That's the whole idea with this light bulb and this dashed line, which is the high of the dealing range. We shouldn't come back into there. We shouldn't want, if we do, we can, but we shouldn't want to stay. And it should be like a RSI indicator telling you that it's very oversold. So look for longs. And now, what happens? The gap doesn't get filled. Basically, when I waited until it rejected, and it created this order block, as you can see there, if I zoom in, you can see that it creates an order block, and I bought right ahead of Q3. So as soon as Q3 hit, the candle was about to close, I bought, and boom, what happens? At 8:15, we get a big, nice candle, beefy candle up. I saw one tick of drawdown because of spread. That's it. I like almost no drawdown. It was easy trade. I held it for about 12 points up to these highs. I wanted to hold a micro, and I wanted to hold it, actually 2 micros. So I took 8 off here. I don't know why I took off in twice. It sold 4 and sold 4 more. But I think it's because I sold at different prices, because the spread might have changed or something. I don't know. But I held on to 2, and I wanted to sell at buy side liquidity, but again, I couldn't hold on to it, and I ended up getting rid of it. So, actually, here's a better picture. So, like, yeah, I don't know. As you guys know, like, I'm a scalper, and I talked about this Friday. I don't like to hold trades for very long. But yeah, so the rest of the morning just runs higher, and I didn't trade this cycle here because I knew that with the way this cycle expanded, when 9:30 hit and we traded above buy side, this isn't a Judas swing. Why? Because we're so overextended throughout the whole morning. We don't have any accumulation, and I am able to frame more upside. So until I see a big rejection and one of these fair value gaps fill, I'm not really looking to go lower. And that's why I just sat on my hands and didn't do anything the rest of the morning. And even in the afternoon, seeing how I don't even show the afternoon here because how much it went up, but I just know the afternoon just probably went up anyways, just like the morning. So, well, just by looking at the daily chart. And that also brings me back to the daily chart. Now, if you look at here, right here, the hourly chart I have here, that red, that's the daily cycle. So the same thing that happens in the 90-minute, the 22-minute, and even lower happens on the yearly quarters, like Q1, Q2, Q3, Q4. It happens on the weeks of the month, and the days of the week. Specifically, 4 days, Monday to Thursday. Friday having its own function. Now, Q1 is in red. That's the first day. Note how in the morning we had manipulation. Here, a reversal. And then, boom. We had that first cycle made a big move higher. It was very explosive. It almost didn't really retrace much. And it's the first cycle of the day. And then what happened next cycle, we continued to move higher. So that kind of resembles this one here, where NFP manipulated, we reversed the rest of the day, and then now we're seeing distribution, and it's the first day of the week. So what does that leave for the other days? Am I looking for manipulation Tuesday, tomorrow? No, that this is what I'm saying, that I don't really know if it's going to continue going lower or higher. I'm still trying to get as good as I can, as I possibly can, humanly can, at reading price. And what price is telling me right now is that it's expanding the first day of the week without having accumulated, so there is no manipulation to be really expected until we accumulate. But again, there's CPI Thursday, so it could be tricky. We could accumulate Tuesday, Wednesday, and then CPI could do its own thing. It could be nonsense, it could be manual intervention. So right now, if I was a day trader, I would not be going short here. This is what I'm saying. I would, if I was a swing trader, I would not be going short. I'd be very careful looking for day trades throughout the whole day. This is why I choose to be a scalper. I don't really have the patience to sit whole days when there's scalps I can do, and I don't choose to be a scalper and a day trader, so I pick scalper. And yeah, so I think that's all for today, and thank you very much for watching. Have a good day.